What's up, guys? It's Nathan here. In an unprecedented turn of events, Australia's property market is soaring even amidst the highest ever interest rate settings. Today, we deep dive into the puzzling paradox and examine the implications of soaring demand, dwindling supply, and a surge in house prices. As households experience the highest interest rate rise ever known, Australia's property market continues to rise. Despite these restrictive rates, national house prices have increased for a third consecutive month in a row, rising by 1.4% in a monthly rate. This exceeds the previous 2 months. Typically, an interest rate cut, an expansion of credit availability, or a new government policy targeting home ownerships act as catalysts for the market to rebound. However, this recovery defies these forces even as interest rates rise at an unprecedented speed and household debt peaks. According to Tim Lawless from CoreLogic, the unusual situation is primarily due to Economics 101. Demand is skyrocketing due to record pace of immigration and post-pandemic craving for space, while the supply is dwindling due to a drop-off in sales and housing construction is lagging behind population growth. The number of new properties listed for sale is significantly below the 5-year average. Furthermore, the annual construction pace of about 40,000 houses is far behind the 70,000 new households formed on each year. This shortage in housing has several implications: increased house prices, an extremely tight rental market, and significant social and welfare consequences. As rental vacancies in capital cities drop to 1%, rents for units and houses have been substantially increased. This situation strains tenants, particularly those that are less well off, as well as landlords whose monthly mortgage repayments have quadrupled compared to the increase in monthly rents. This rental burden has led to changes in arrangements out of necessity, with more people opting for roommate or space sharing, with individuals even moving back to home. And according to Macquarie's economists, this could result in an increase in the average household size. And if you find value in this video, please consider doing me a little favor and hitting that subscribe button, as it really does help out the channel. And a big thank you to all our subscribers for your support. Inspires us to create more content we hope you'll enjoy. With increased interest rates, housing markets in the US, UK, Canada, Sweden, and Germany are starting to stabilize. Tim Lawless speculates that house prices might continue to rise, but the current rate of growth is unsustainable due to the affordability and serviceability constraints. The trajectory of interest rates will be the critical determinant to house price growth. However, higher interest rates and borrowing costs are beginning to influence households' behavior, with early signs of economic activity slowing. Current household debt levels and increased borrowing costs have resulted in the most restrictive setting Australians have experienced. The so-called fixed-rate mortgage cliff is arriving, and we are about to understand the real impact of high interest rates on consumption. We have reached a critical juncture, with the housing market appearing to be robust on the surface, but the underlying reality might be different. The Reserve Bank of Australia is dealing with a high degree of uncertainty and is competing with different forces. And whilst it is unwise to bet against Australian housing prices, relying on the Reserve Bank for rescue could prove perilous. And this is where the performance of property prices through May have been quite impressive. We witnessed a rise of almost double the rate increase compared to that of April alone. Looking at Melbourne, for example, auction clearance rates this weekend achieved an extraordinary 72.3%. Adjustments are likely going to be downwards revised later in the week, but this is the highest clearance rate since February of last year, up from last week and outperforming the 10-week average. In line with this heightened demand, prices have risen for the month, a significant jump from last week, which is almost flat. In Sydney, the market has also continued to lead with strong auction clearance rates and further momentum in the marketplace. Sydney auction clearance rates this week reached 74.4%, improving upon last week's and exceeding the 10-week average. Sydney's property prices have maintained their upward trajectory, climbing an additional 0.5% this week and totaling a 1.6% rise in May, outpacing April's 1.3% increase. Brisbane and the Gold Coast and even Perth are not far behind, with house prices increasing at 1.2%, closely followed by Sydney's growth. Meanwhile, in Adelaide, prices have seen a respectable increase of 0.9%. These trends reflect the recurring theme we've discussed, the persistence of undersupply in the housing market. Rental vacancies at an all-time low, and the asking rents are increasing rapidly due to renewed immigration and population growth following Australia's borders reopening. The supply of established properties for sale is at the lowest in over a decade. Interestingly, house prices have continued to rise despite the ongoing increase in interest rates this month. This poses a likelihood of further rate hikes. The Reserve Bank of Australia is closely observing these price dynamics. Their objective is to slow down the economy and manage inflation effectively. In their recent board minute meetings, the Reserve Bank noted an upgrade in their forecast for consumption growth based on stabilizing house prices. The latest data will likely reinforce these expectations of steadier house prices and the impact of consumption growth, inflation, and the potential for upside risk on interest rates. Remember to like, share, and subscribe to stay informed with all things property and finance. So what do you think the Reserve Bank needs to do? Do you think rates are going to go up this month due to all the housing activity and lack of supplies around? Did you know here at Hunter Galloway, we're a mortgage broker and we get loans approved. So if you're looking for help and need assistance, we work with people Australia-wide. Give us a call on 1300 088 065 or visit our website huntergalloway.com.au, where you can click the free assessment form and we'll get in touch. Guys, as always, thanks for watching and we'll see you next time.